Stocks off to the races, hitting new highs as traders see Federal Reserve Chair Jerome Powell opening the door to interest rate cuts in his final address at Jackson Hole. I'm Brian Brenberg, along with my co-hosts Lou Bassanese, Dagan McDowell, Jackie DeAngelis, and with us for the hour, Making Money host Charles Payne. Welcome to the Big Money Show, one and all. Powell emphasized the high level of uncertainty facing the central bank, citing sweeping changes in tax, trade, and immigration policies. The economy has shown resilience, he says, but the balance of risk may be shifting.
Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising.
Okay, so that's some really exciting Fed chairman speak right there. But the translation for the market, Charles, go to you first, is these guys might cut rates in September.
Yeah.
And I mean, maybe it's a quarter, maybe it's more than that, but the market seems sure of it. What do you think?
I think this reaction goes further than that. There's something else he talked about later on with long-term policy. This is the line that I think is really pushing this market. It appears highly likely that if the economy experiences even a mild downturn, our policy rate would be back at the LEB very quickly, the lower bound. He talked about this post GFC and how it stayed there for 7 years. A hell of a period. You know, that 2009 period is when this secular bull market began. So for probably another extended period of time. So he's talking about dramatically going low for a long period of time. At the slightest, a mild downturn. That's the ultimate insurance policy.
Okay, Lou, what do you think?
I'm all in. Giddy up. This bull market's here to stay. I'm absolutely, got to be honest, I'm shocked. I did not think Powell was going to come out and say that he was open the rate cuts. He had the cover in the data to justify staying higher for longer. I don't think he should have, but if you look at the weakening jobs market, it was kind of a mixed bag. And then you have the September revision coming to the BLS data that would have given him some volatility to say we haven't seen really yet if the inflation has kicked in. But I think it's been wild watching the futures markets for whether there's going to be cuts or not. From CPI last week to PPI, it's bounced all over the place. But I think it's a pretty strong vote of confidence for this bull market in the economy that we're getting a cut.
Okay, so just to be clear, what I'm hearing so far is we think Powell came out today and very strongly said, I'm open to cutting rates, because Powell's supposed to be the guy who doesn't like Trump, who doesn't want to do rate cuts, who doesn't want to look like he's getting pushed around. Did he speak as strongly as that, do you think, Jackie? Or is the market hearing what it wants to hear?
No, I think he did. And actually, I'll add to your shock a little awe, because that's what I felt when he talked about tariffs. And he was referring to tariffs when he said a reasonable base case is that the effect will be relatively short-lived, a one-time shift in the price level. This is not the stance that he has been taking on tariffs. He has been saying there are inflation headwinds coming down the pike and you better be scared and run for cover. And that's been part of his thesis, which has been why he's been ignoring the labor market as well. So I think what happened today is Jerome Powell had a wake-up call. He feels he can save his legacy by doing the right thing, by interpreting the data the right way, and signaling to the markets that the Fed is ready to move. But to me, it's way too late after way too many mistakes. I think the market is excited because it feels like this signals a shift. He'll start, then we'll get a new Fed chair that's more capable. President Trump is going to make an announcement about a nomination soon, he said, but then he got a little distracted with this Ukraine-Russia stuff. And I think the market sees bright skies ahead. But I think this was one last-ditch effort for Powell to try to save his reputation.
Do you think he had this big change of heart, Dagan?
I think that he is repeating what we've heard from Treasury Secretary Scott Bessent and participants in the market, the biggest investors, particularly in fixed income. And that is the labor market and the jobs numbers are telling the Fed, even beyond what the Treasury, the actual Treasury market is telling them. The labor market is telling them that they need to cut interest rates and cut now and potentially even cut 0.5 percentage point in September. I don't think that he went that far, but labor market, and that is the reason. So when you got the jobs revisions in July, you got, 2 months, much lower job growth than anybody was expecting because the Bureau of Labor Statistics is a screwball operation. So Rick Reeder was on our network with Liz Clayman the other day, head of fixed income at BlackRock. He said 3-month moving average is hiring of 34,000 jobs per month. If you take out health care, which is not cyclical and not interest rate sensitive, you go, that's 67,000 of the 34,000 jobs. You go to negative job growth. You're at the risk of stall speed in the economy because of the employment picture. And so even the 2-year has been telling the Fed for months and months that you are way too restrictive. You need to be more accommodative. They could easily come down a whole 1 percentage point by the end of the year.
Yeah, to add to Dagan's, that average went from 200,000 3-month rolling average down to 37. So that's a big drop. But I think Charles had it right. It's not about one single cut. It's about the trajectory and how far we go. And that's really going to be the catalyst, not a single 25 basis points.
Okay, since you brought up jobs, I do want to talk about one of the jobs in the Federal Reserve Board, and that is Lisa Cook. And President Trump had something to say about that today. Let's listen.
Trump, you're going to fire Lisa Cook, the Fed governor, over her mortgage fraud?
I'll fire her if she doesn't resign, yeah. What she did was bad, so I'll fire her if she doesn't resign.
Okay, Charles Payne, I know you're going to be talking about this later today on your show because you've got Bill Pulte with you. The president came down pretty definitively here. What do you think?
Yeah, and I think the idea that the DOJ sent Powell a letter offering him a chance to, maybe make this graceful, not combative. I think they have the goods. I don't think Pulte would have put it out there. They weren't 99.99% sure that something went wrong here. Ironically, the Fed just recently released a white paper on this, and it's not just her, but 22,000 other people have committed potentially, if this same thing or this sort of mortgage fraud. And obviously, it's a disqualification to be on the Federal Reserve Board. There's absolutely no doubt about it. So there will probably be another opening. Ironically, a lot of folks, let me tell you, watching some of these people who that are smart, brilliant people that I've followed for a long time, but they have TDS, like acute TDS. Over the last year, this year particularly, it's been just remarkable. But today, their anger, frustration at Jay Powell is off the charts. I mean, they are so angry that he, didn't talk about Fed independence, that he didn't talk about hiking rates, that he didn't defend Lisa Cook. Like, they are really apoplectic about all of this. But the bottom line is, I don't know that he could have done any of those things today.
That paper that the Fed did on, I can't remember which bank it was.
It was the
Philadelphia.
Fed. Yeah.
The Philly Fed. So that number that they came up with of the total number of mortgages they examined, it was close to 4% of the mortgages they examined entered into occupancy fraud. Typically, they go after income or the asset fraud. But if it's 4% of mortgages involve occupancy fraud, and I know why people do it, particularly with, say, a Fannie Mae, a conforming mortgage. And in Cook's case, the mortgages were taken out 2 separate states at the opposite ends of the country, longitudinal. Were taken out 14 days apart. Yeah. They do it because if they know the lenders, and particularly if the loan is being sold to Fannie Mae, that if you have a second home and they want you on a second home to put down a lot more money. Because if you're not living in it and it's not your primary residence and you have very little down, it's like 10% down, you're going to walk away from it.
Right, exactly.
You're going to go, oh, I'm underwater. I'm donezo. And so it immediately turns into a bad mortgage. So it's not just the interest rate, it's also the down payment. And the fact that all of the regulators have essentially been letting people get away with this ever since the housing collapse in 2008 is just astonishing. So good on Bill Pulte. And I'm also a fan because he tweeted in favor
saw
of me
that.
instead of Gaspo yesterday, which I didn't retweet it because I didn't want to be mean, but
Oh.
if
But you'll say it on air, right?
If Gaspo comes after me again, maybe I will.
You got it.
retweet
You have it in your quiver. It's one of your arrows. You got a lot of those arrows in your quiver, though.
Yeah, and I have a long memory, like going back to when I was in second grade. Long memory
That's interesting. I did not know that you got an official ruling from the
from
umpire on that one.
Mr. Pulte.
Well
Yes.
done to you.
Thank you, sir.
Sorry, Charlie. Time for a market check, Jackie. You're looking at NVIDIA. What's going on?
I sure am. NVIDIA reportedly hitting pause on production of its H20 AI chip designed specifically for the Chinese market. According to the information, that's the company that has released, it's instructed key suppliers like Samsung to stop any work related to this H20 chip. Now, the stock is up today because the entire market is up on this rally, and tech really sold off this week. But this is a move that's coming after Chinese officials urged local companies to avoid using the chip among ongoing tensions between D.C. and Beijing. And that is really interesting.
Well,
if everyone's excited about NVIDIA because they're sending this low-end chip over to China, but China all of a sudden says, hey, let's boycott this.
This is mostly kabuki theater. They've talked about what Lutnick said about their dependency and their addiction to NVIDIA. Which was, to be quite honest, it was a more of a Peter Navarro type move, and maybe considering how President Trump has been negotiating with Xi, and he's always sort of complimentary, even though he says we have to go at this, we're both trying to do the best for our countries. I think it was an unforced error on Lutnick's part, but it won't change a thing because this is not just H20s, but we're talking further on. I mean, these are intense negotiations that are going on right now. This is a small part of it. And what do you do with Blackwell? What do you do with the next chip after that? Of course, we want to do business with China, but we also want to make sure that they don't ever have enough computing power to decode our nuclear submarines, right? And so I think this is just mostly for public consumption, and I wouldn't be surprised if we hear some major official deal on this probably next week. By the way, NVIDIA's earnings next week will be a bigger event than Powell was today.
I agree with Charles. We went through this with the 5G boom with smartphones. The Chinese said they didn't want U.S. tech, but in the headlines, but they were actually trying to scoop it up through Avago for RF front end. So I think it's a similar play out. They need this technology.